at 382 naira 61 kobo at the investor and exporters markets. Now let's take a quick look at the Nigerian energy stocks there. The oil and gas index of the Nigerian Stock Exchange closed higher by 1.56% owing to demand for O&O, which went up by 9.90% to close at 8 naira 55 kobo, and the volume traded was 12.08 million. And also Total, of course, went down, closing at 265 naira per share, down 1.45%. Looking at those slides there, we could see that the other stocks there remained unchanged. And then the daily index return for those stocks went up 1.7%. Year to date was up 8.3%. Price to earnings 84.1, and dividend yield was 2.0%. Let's talk to an investment analyst at ARM Securities, Kayode Omoshebi. Good morning, Kayode. Thank you very much for joining us.
Good morning, Chineze. How are you?
Now, Owando stocks seem to have become investors' toast in recent times, looking at the oil and gas sector there at the Nigerian Stock Exchange. What is the catch?
Well, for Owando, coming from the bad year, 2016 was bad for them. They made losses almost all through 2016, apart from Q4, where they reported a profit and also supported by tax credits. So Q1 was quite good for Owando, and that basically supported the fact that they've done a lot of the leveraging. Production is higher, and the crude oil prices is quite higher. So people are just beginning to look at qualities. Recently, too, there was a news about them actually getting the license to operate the Port Harcourt refinery, and then also the downstream business is also looking good. That basically will support their earnings, so it comes below the line. So I think that's what's driving the sentiment in Owando, despite the fact that the company is still going through a lot of plans to sell some of their assets and the leverage. But we've seen the stock actually gain about 81% year to date. We will trace back on Friday and Monday, but we're going to see a lot of investors actually coming back into the stock. And so Owando basically is feeling like something that will basically cross the 10 naira line many times soon.
Now, Owando is one company that is into downstream and upstream business. Put this side by side with stock like Seplat.
Yes, well, for Seplat is a very big player than Owando. I mean, Owando has a total capacity of about, let's say, 45,000 barrels. Well, we have Seplat that actually can do more than that, roughly about 80-something thousand, even close to 120. But the problem for Seplat is the fact that Seplat has an issues because they're basically heavily reliant on Focado's terminal. And so until Focado's come back on board, they will still continue to struggle in terms of their financials. Even though the company has tried to create some export routes and the alternative terminal of Warri, is still very insignificant in terms of what it can actually do to come back to profits. So Seplat is very, very linked to what crude oil prices, production, and what the sales will look like for them. But because of Owando, it's more diversified, and even though they sold majority stake in their downstream gas and power business, the profit still comes below the line to support them. So they have the upstream, they have the downstream, they have the gas and power, and they also have the midstream, that's the service line. But that one is still on a loss position currently. But the downstream is very good, and that's because oil prices, fuel prices have supported them, and also the government's effort to actually create supply in that place. And also diesel prices have been raised. So Owando has a market share of about 15% in the downstream space, and that's quite good for them.
Looking at the first quarter earnings posted by these two companies, were you satisfied?
Yeah, well, it was in line with our expectations. For Owando, basically the fact that what drove the earnings, like I said, oil prices were higher, production was also higher, and then they've also deleveraged. So even net interest expense, net finance cost was actually down roughly around 30%. So that basically just helped the company. And then last year, first quarter 2016 was a very bad one for them. And that was because of that finance cost. And then also last year, when they devalued the currency, we saw that spike in terms of their finance charges. So Q1 was good, and we're actually quite happy with that. It shows that the company is on track to come back to profit in full year 2017. For Seplat, the concern for us was that even the fact that they've actually had that alternative terminal, as at Q4, that production actually came down. But what they're saying is that there's a lot of ongoing renovation at that space, And so maybe from Q2, we'll begin to see that improvement. And then the big break for Seplat is for Cardos. If Cardos come back on board, then they really come back to profit. So investors really now looking to get on Seplat. The stock has come down roughly about 10% in the last few days. But now people are beginning to pick the stock, and that's because there are a lot of news are ready to be opened, and now we also bode well for Seplat.
All right, how much impact would you say the recent development in the global oil market would have on the stocks and operations of these two companies?
Okay, yeah. For the upstream guys, it's more from where crude oil prices are looking. So last year, average crude oil prices was around $43 $33.50 per barrel. So we're seeing we have an average looking at about $55 per barrel in 2017. So that increase in crude oil prices around 10 naira is actually good for them if production actually can stay at current levels or actually can increase. So it's from that leg, it's just about what the crude oil prices are doing and how they can actually edge it. Most of them have started to edge their production for this year at the current high levels we've seen. So even there's any little downside in crude oil prices, they can actually will actually not affect their earnings. For the guys who actually have some downstream exposure like Oando, increase in crude oil prices actually can create concerns for what pearl price will be. Currently, if you do the exchange rate and put a $55 per barrel, that comes to pearl price of around 168. But because of the concerns about the populace, we don't expect the government to increase pearl price, and that will actually begin to up their margins. The only concern is if the government can actually continue to supply FX at current levels for them. So it's good for the upstream, but it's a little bit bad for the downstream player.
Now, talking generally, what is your outlook for these stocks?
Okay, for the stocks, we think Seplat, based on where they're coming from last year, we think Seplat basically is on a good approach. Thing for this year. They finished ongoing work at their refinery and also for Cardos, and then they also expect to open another route at Escavos this year. So we think we're quite positive on that, even though current prices are at least above our fair value estimate, so we have a sell rating on that. And for Oando, our ratings are still under review, and that's because of a lot of ongoing plans. But across the oil and gas stocks, our key guys, the ones we like Total. We have a target price at about 345. Total currently is trading around 268. And so we think that there's a lot of upside there, about 40% upside in Total.
Okay, thank you very much, Kayode, for your time. Kayode Omoshebi, investment analyst with ARM Securities. We'll take a quick break. We'll be back in a moment.